If a nonprofit is wishing to produce a podcast to further their cause, share information, and spread awareness, and they want to seek sponsorships by asking corporations and individuals to support the podcast financially, what are the guidelines? What else do they need to consider so that they are completely transparent with donors? Basically, in essence, aren't they receiving goods or services with this?
It's like a meta question, isn't it? Right? Like
it is.
It's a podcast question to a podcast, and so we've entered the matrix. So this is a really sort of classic question about is the activity that is the money that we're getting from someone considered a contribution, or is it considered an exchange transaction?
Right.
And so there's this flow chart that if you've ever taken a nonprofit accounting class or a nonprofit finance class or done any kind of bookkeeping in the nonprofit world at all, this flow chart is like burned into your brain. So as soon as the money shows up, the first thing you have to decide is this a contribution or is it an exchange transaction? And what the definition of an exchange transaction is the donor receiving some goods and services for the contribution? Are they getting something out of it other than a good feeling, right? Or the sense that they're helping out the community? So the IRS, it's like IRS and FASB, or the Financial Accounting Standards Board, who like creates GAAP. Like there are very specific rules about when something is a contribution and when something is an exchange transaction. And it sort of all boils down to, is the intent of the thing, like, could you provide some sort of fair market value for it? And then is the intent of the donor that they're giving you a donation, or are they really getting something back? And in this case, if they're sponsoring a podcast and you're going to say their name, they're effectively buying a sponsorship. They're buying an advertisement. They're doing this because they're getting something back. So we're already kind of in that exchange transaction lane. The question then becomes, is a portion of what they're giving you over and above what the actual value of it is? And we see this in silent auctions all the time. The silent auction is kind of the perfect example for this thing. Like, is if I bought a $20 gift certificate and I paid $18 for a $20 gift certificate, like, none of that is a gift. Like that is just, I just got a discount, right? I got a discount on that. The nonprofit doesn't get to claim that $18 is a donation. The donor, me, the person that bought the $20 gift card, does not get to say that I gave a gift of $18 to this nonprofit because I got something worth $20 in exchange, right? And so fair market value is an important component of that. In the silent auction example, like, and that's why you'll see, like, when you're doing a silent auction and you'll see something like, the fair market value of that thing needs to be on there. And that's the finance person saying, we have to put the fair market value on there so that I know when this money comes back, which part of it was a donation and which part of it was an exchange transaction, so I can give the donor the appropriate receipt.
Yep.
So it's pretty clear I think it's clear on the silent auction side of it. For a podcast sponsorship or any kind of sponsorship, so like the sponsorship for your gala event, that's harder. So what's the value of a transparency blasted on the side of the ballroom, like some like slideshow?
I mean,
what's the value of a small ad in the program? What's that, right? So how do you determine what these things are? And unfortunately, the value is what someone will pay for it, right? So the way the IRS, the way the FASB kind of wraps their mind around this is like, if somebody says, I'd like to sell a sponsorship and it's cost $500 and this is what comes with it. Like, what comes with it is worth $500 because somebody's willing to pay for it. It's sort of this weird sort of axiomatic, a reflexive thing. Like, if you paid $500, it's worth $500, right?
Right.
And the only time we're really talking about the value of something, part of it being a donation and part of it being like an exchange transaction, when it's split like that, is usually when it's like a gala event or something like that. And they're like, well, dinner was worth this and the 2 glasses of wine were worth this. And, the band was worth this. And we can kind of say, so this portion of your ticket was not tax deductible and this portion of your ticket is tax deductible. Right. And a lot of times once you do the math, you realize that like none of it's tax deductible. Like, you spend enough on the event that like you can't really make the math work. So in the case of a sponsorship, like unless you're being really clear up front and you can prove like that I've got this many listeners, and if I were to just go out into the market and sell a sponsorship for my podcast, this is what someone would pay me for this number of listeners. And there's actually plenty of places that do that. So you can actually look and see, because podcasting is everywhere right now, you can actually say, like, how much can I get for a sponsorship if I have 100,000 listeners? How much can I get for a sponsorship if I have 12 listeners, right? And if you're a nonprofit and you're doing this thing, you probably have 12 listeners, right?
Let's be real.
Yeah. And you're probably getting, so like 12 cents might be the fair market value for a podcast sponsorship. So you could use that and say like the typical sponsorship per listener, like rate is this, and this is what we're asking the sponsor to give us. So this extra part of it could be considered a donation. So that would be one way to do it. You just want to make sure you document it and you have all your paperwork ready, and that you've had that sort of open conversation with the donor about what you're doing. Is like, so some of this is truly advertising for you, but it's going to be advertising to 12 people. So it's only worth this, right? So I think you could figure it out that way. It's not going to be 100% unless you've got your podcast just blew up because it's the best thing ever. Maybe it's all an exchange transaction. It's unlikely to be all a donation, though.
I do want to throw a caveat into this and see if this changes it. So let's say this organization didn't use the word, quote, sponsorship, and just, we are asking for your financial support of our podcast, and the expenses and time it takes to produce this. And there's nothing mentioned about any kind of advertising, and the nonprofit just ends up mentioning, thank you, at the end of an episode, thank you to the following 7 individuals or corporations who gave to us to make this possible. So other than a name placement, it's not talking about anything to do with what that business does, or, here's their website, or here's an ad. Would that still be, I don't know if I'm getting really technical, but I'm thinking about how could you do this as a nonprofit if you're trying to avoid some of this complication? Is there a way to package this, or am I getting just sort of sleazy with my question, like trying to find a loophole?
So as soon as you start the lawyering process,
which is what I'm doing, is that what we're going to call it? The lawyering. That was a nicer way than saying, yeah.
You have to imagine that you're going to have this. If you need to like wrap your brain around it and make it really technical and complicated, you realize that you're going to have this exact same conversation with an auditor.
That's true.
And they're better than you at that. They do it all. The only reason they go into public auditing is because they like arguing with people about technical details and what about, right? So you just have to like recognize that on the front of it. So there's nothing really preventing you from saying like, we'd like to thank the following donors to our organization, right? The other thing that makes this less like not that big of a deal is that if the person that's sponsoring your podcast happens to be a corporation, they can't take a tax deduction for sponsorship anyway. If it's it's an S corp, maybe they can because it's going to go flow to their personal. Are they itemizing? Maybe not. I mean, there's a lot of the sort of donor calculus that you may be turning yourself into, bending yourself into knots to try to come up with this thing that really has no value to the person that's going to sponsor the podcast. Because if it's a business expense, if it's a corporation that's doing it, that's just a business expense. Right. It already comes off their taxes, right?
Advertising
is a totally legitimate expense. Yeah. 100% totally legitimate expense, right? And which is why, we have this conversation a lot, like sort of within nonprofits as well. When you're talking to corporations, sometimes you're going to be more successful having a marketing conversation with the marketing and advertising team than you are with the like community relations, like touchy-feely, we want to make ourselves feel better team, because they have more money to play with. And they're also not like picking and choosing based on cause. They're trying to get their name out. So you may, like with your 12 listeners.
Yeah, I was going to say, good luck dealing with a marketing advertising person on that one. Yeah.
But if you make those two things together, I can say it wouldn't be difficult if the thing that they're interested in is animals, and they put all this money in animals, and your nonprofit is doing a podcast and it has something to do with animals. that's not a hard sell for the marketing team to say, hey, you guys want to sponsor our podcast about animals, right?
Yeah.
They might just say, oh, yeah, sure. How much is it? You're like, $200. They're like, okay, $200. I can do that, right? They're laughing at you the whole time.
Of course.
So, right. So whether or not it's a donation or not may not be meaningful. And which is why it's good to talk to the donor about it first, rather than just like trying to come up with this complicated scenario that they don't care about anyway, because it doesn't matter. But it's a great question. I think it's a really interesting question. And hey, we need more nonprofit podcasts. I think the more the merrier.
Oh yeah. I love it. And I love that. I remember when we started this, Andy, just to walk down memory lane, like I don't feel like there were that. I mean, I know there were podcasts out there, but there weren't nearly as many. Now it's kind of like you bump into someone and they're like, yeah, I have a podcast, and someone else, like everyone's got a podcast. So it's like, wow, it's
a joke at this point.
It is kind of a joke. I was like, so much for feeling special about having a podcast. Oh, well.
Nonprofit governance.
Nonprofit answers.
Nonprofit board. Nonprofit management.
Nonprofit marketing. Nonprofit resources.
Welcome to Nonprofit Everything, the podcast where hosts Andy Shurick and Stacy Wedding answer your questions about all things nonprofit.
Welcome, everybody, to another episode of Nonprofit Everything. I'm Andy Shurick. I'm here with Stacy Wedding, and we're here to answer all kinds of your nonprofit questions. And for those of you, so we had, and I haven't even told Stacy this is new, we had a technical error in our RSS feed. And what was happening, and so what the RSS feed is whenever we post a new Nonprofit Everything episode, it gets put in this file that lives out on the internet someplace, and all of the podcast aggregators like point at the file and go, hey, there's new episodes. And it was working for a lot of them. For some reason, it was on Apple, it was on Spotify, it was on Google, it was on tons of these. But there were a chunk of these aggregators that were not picking up our episodes because of a technical error that Andy made back in November. So for those of you who just said, oh, hey, they're back, you now have about 15 episodes you can go back and listen to. Actually, I think it's 10. You've got 10 episodes that just dropped this week because once we fixed the error, all of these new episodes just flushed through. So if you thought like, oh, Andy and Stacy disappeared, they must have given up, right? We didn't. You just have a whole bunch of listening to do. So congratulations and thank you for sticking with us.
Oh, wow. I'm sort of like, so question, how did you discover this? How did this?
So Google had the Google Podcast app, and they just sunsetted their Google, because it's Google, right? They just like, oh, we're bored of this, so we'll get rid of it, right? So they got rid of their Google Podcast app. And so I switched apps. I switched my podcast listening app from the Google one to a different one, which is called Pocket Casts. They're not paying me for this. It's just the one I picked. And when I switched, I'm like, how come there haven't been any new episodes of our podcast since November? And immediately freaked out because, oh my God, have they just not been dropping at all, right?
Oh boy.
And so looked around and tried to figure out what it was. And it was still on Apple. It was on all the Google ones. It was on Spotify. It was on in all the like big places. It was all in the normal places. But there were a handful of these podcast aggregators that for some reason didn't pick up podcasts starting from November on. And so did some research, poked around, did a bunch of boring stuff using XML editors, and realized that there had been a mistake made at some point by me. And that because of that mistake, it got dropped off from some of these. There was a redirect that got missed and it got dropped off some of these. So all of the sudden now they are all there. I've checked. Everything is fixed. So welcome back, everybody. We've been here the whole time. Where have you been?
Welcome back. And I do want to say, you know what is kind of like a relief to me about that entire situation? You're not going to be able to guess this. You're never going to guess this, Andy. Here's what's a relief.
What's a relief?
You are failable.
Yes. Oh my gosh. Yes.
I always think of you as like perfect in all things. And so I'm like, oh my God, he makes mistakes too. He's human. He's mortal. So anyways, thank you for sharing that you actually make mistakes. And thank you for finding it.
Yeah. And for those of you that have, a bunch of podcast episodes to listen to, thanks. Enjoy.
You might actually be cursing us. I hope you're not like, Now I have so much catch up to do. Thanks a lot, you guys. So
Yeah, great. You give me work. Okay, Stacy, here's one that's I'm hoping we can answer. So the question, I'm not actually going to read the exact question because it's very specific. And the gist of the question is, how do you find out what other nonprofits are in your community that are doing similar work to you? What's the best way to look and see who your competition is or who you can learn from?
yeah, I mean, I think a lot of organizations wonder that, and particularly want to compare and see, like, what am I doing, and what are they doing, and are we doing it better than them, right? So um I mean, I think some like very basic things that come to mind besides just doing the good old fashioned internet search, and even with some of the artificial intelligence tools, I know people have mixed feelings about those, but it's amazing when you just even like, for the specific question that we got that was tied in more to sort of shelter dogs and rescue dogs and sort of some complexities around the type of mission work. I just, for, giggles, like typed it into an AI tool just to see, and not a paid version, a free version, right? Just to see. And it rattled off like 5 different organizations and websites that are, in the state of Nevada that actually felt pretty legitimate to me. So it made me start thinking like that feels like a first, step if someone really wants to kind of dig deeper. But, in the internet research, but I also think there's organizations like Candid, used to be known as GuideStar, right? But Candid has, you can search just anybody who has filed. They've got that sort of alliance, or they take the information submitted to the IRS and it gets uploaded through Candid. So like every 990 that's been filed, every, nonprofits, it's sort of that kind of, they make sure like all that information's on their website. So you can type in a foundation, you can type in a nonprofit, you can put in like a general search term, animal rescue organizations, right? And narrow your search to like a general location or geographic location. So those are some of the tools that if I were really wanting to do my research, I would just start with good old fashioned technology. How about you?
Yeah, I remember when before that was GuideStar, it was the National Center for Charitable Statistics.
Yes, it's been a few different things, right?
Yeah. And it was like a great idea at the time. They're like, well, if we just contract with the IRS, we can suck up all this 990 data and then we can figure out ways to slice and dice it. And I think the first thing they discovered with the 990 stuff was just how bad people are at filling out the 990. That was like the big takeaway from that first project. Was like, wow, people don't know how to read this thing, which is why we have the 990 EZ now. And like, there are better ways to do it.
Yeah.
But yeah, it's a great place. And I use Candid all the time. I haven't paid I don't have a paid subscription. I still have the same old one that I've always had because that gives me enough information. And plus, I can read a 990. Like I know exactly what I'm looking for. And that usually gives me enough information that I can kind of dig in and figure out what I want to find out about a particular nonprofit. And if you're doing the 990 right, you're also entering in the sections that talks about what your mission is or your programs are. You're actually putting in more information. They give you like 4 lines.
Right.
And good nonprofits are putting in lots of information. They're saying like, see Schedule O and writing like paragraphs.
Right.
Because one of the things about the 990, it's not like a regular tax form that you fill out, right? They give you the option to give them more information than what you want. And then it becomes a marketing tool. So we've got all this information jammed in there. And then people are looking at the 990. And you could if you mail a brochure to the IRS, that gets scanned and it ends up on GuideStar. So you've got like an extra place where people can see what you're doing. 100% GuideStar, Candid, fantastic place to research stuff. Yeah. The other way I think to research specific programs. So if what you're doing, so this question was again, very specific about, shelter, underfunded medical needs for shelter dogs.
Yeah.
And I mean, Stacy and I were both like, okay, we've heard of that, right? Yeah. We're certainly not experts in that particular subfield of whatever. But if what you're doing is something that the federal government is giving money for, if there are federal grants that are supporting the thing that you're looking at, Another really good place to see who else is in your space, not just locally, but nationally, is a federal website called usaspending.gov. And of course, we'll put links to that and Candid in the show notes so you can kind of see what's available there. So usaspending.gov is anytime anybody gets a federal grant, anytime there's any federal grant money that's given to any nonprofit or for-profit for that matter, that information, including their application, their history of how much they've been funded, all of that information goes onto a public website that's available for anybody to read. It used to be really confusing and hard, and you'd have to call a secret phone number and say the password to get that information. Now it's all just freely available on the internet. So it's a really good way. If the thing that you're doing is something that the federal grant or the federal government wants to give grants for, you have tons of information about exactly who's doing it, exactly how much federal money they're getting, like how it's spread out across the United States, like what states are doing it really, really well, what states are not doing it as well. And here's the other secret too, that most nonprofits, and we say this all the time, and you imagine if someone were to call you as a nonprofit staff person and say, hey, I'm in Minnesota and we're working on something and it's similar to what you guys are doing. Do you mind if we just chat for a minute about the kind of stuff that you do? And 100% you're going to say, yeah, sure, let's talk, right?
Yeah.
Because we're not really in competition
Right.
with a nonprofit that's in Minnesota or Clearwater, Florida, or wherever else, right?
Yeah.
We might be going against each other for very specific local grants, but as soon as you get out of this local area, like the likelihood that our donors are your donors is very, very low.
Right.
So you can talk to anybody anywhere. And if you have questions about how to do stuff or how they're getting their money or what programs they're doing or what they did last year that totally failed, like just call people, find somebody that's kind of the same level as you, which is always a good thing. And they're totally willing to chat, which is a great way to find out like who's doing the same stuff you're doing and how successful is it and what programs should we do and what programs should we not do, like all the stuff that you agonize over because you don't feel like you have any peers, which was kind of the gist of the question. I thought was like, who are my peers in this space? Look nationally. That's a great way to find peers in the space that you're in.
No, I love that idea. And I also think it doesn't always happen. So I say don't have high expectations for it, but sometimes you find organizations locally as well that are willing to share because of just the way they're structured and they realize there's enough need and demand and they're not as threatened. That doesn't always happen, as you and I know, right? There's a lot of
Right.
that competition or territorialism, siloing, but I've seen that in some industries, not necessarily animal welfare. I think that one's a tougher, more cutthroat industry, but I have seen in other industries where someone will be at, maybe it's a really large topic and they know that they're only doing a piece of it and there's other parts to solve for the problem. You need more partners, you need more people working together. And so that's where some of the cool collaborations come together and people all stay in kind of their area of strength instead of, streaming off. Now that I think that takes a lot of trust building and time locally and a lot of understanding that you have to come at it from a way that isn't going to threaten somebody, but that's more like, hey, we're looking to really understand the landscape so that we, so that we can focus more on an area that we think, that no one else is covering, or that maybe we can share, get rid of this program and give it, sort of hand it over to somebody else or whatever, like, sort of talk about some collaboration. From time to time that happens. So I don't want to totally say it's not possible locally. I think national is an easier, safer way to do it. But, I also have seen it happen locally. So if you're brave and you want to go down that path, you could try that too.
Yeah. And I wouldn't overlook like the state association, places like AFP or something like YNPN for the I never know what the acronym stands for.
Young Nonprofit Professionals Network, I think.
There we go.
Is it
Young
YNPN? Yes, that's
YNPN.
it. Yes.
Thank you. So those are good places to meet people that are in similar roles as you that might not be in the exact same sort of mission area that you are. And that's another great way to sort of expand out your knowledge and what's going on, is to talk to people that are doing the same role as you. I know for me, I'm probably the most annoying person. When I first started and I got into the finance side of nonprofit, I was annoying. I called everybody, "Hey, I'm I'm new at this thing and I'm trying to figure out this one thing. Do you have like 10 minutes to talk to me about how you do like fixed assets, replacement cost, blah, blah, blah?" And like, they're like, "Oh yeah, sure. Let me show you how I do it." Right. And so I learned a ton just by like being annoying and asking questions. So for me, that worked, but that's my personality too. So I don't know.
And but I think in addition to that, yeah, you can look at asking people when you think about nonprofits, even though everyone feels like theirs is this unique unicorn, let's be honest, there's operating a nonprofit, put the program and service piece aside for a minute, right? That's where there tends to be some distinction and things that make it unique, but everyone has the same rules they have to comply by in general. I mean, some have even more complexity depending on the type, but there's some very commonalities, finance, marketing, a marketing challenge for one person. It's same in the business world, right? Like you can talk to other businesses that aren't the same as yours and learn from them. That's why there's mastermind groups. So no, I think there's a lot of room to not only learn who's in your field, but learn from them and others. So I hope that I know that we sort of took this question and kind of went a little bigger with it, but I do think, to your point, Andy, it felt like that's what the intent of the question was really trying to understand who else is doing what we're doing. And that really begs, the question and leads to these answers. So.
Could you assist me in gaining a deeper understanding of charitable gift annuities? We have a prospective donor interested in contributing through this method. I value your opinion on whether pursuing this avenue is worthwhile.
So charitable gift annuities are sort of that tool in the kind of gift planning toolbox when you hear about planned gifts, which can happen, during someone's lifetime or after their lifetime, but things that are a little bit more, have some more complexity to them. So in basically a nutshell, right? In this scenario, it's a contract between the donor and the nonprofit, and in exchange for sort of the donor gifting cash or assets, maybe it's appreciated assets. So let's just take, for example, I'm a donor, I have some appreciated stock. I still need an income stream during my life, but I'm going to gift this stock to you, nonprofit. And you, nonprofit, are going to agree to make fixed payments to me, an annuity, right, for the remainder of my life. And then upon my death, you will, get the remaining assets for your charitable purpose. So that's my understanding of them. Did I get that right, Andy?
Yeah, for that specific scenario. I mean, there's a whole class of these things called split interest agreements, which means that
yes.
the asset itself, like the activity, is split between two parties, and almost always in with the ones that we care about, one of the parties, us, is the nonprofit, and the other party is usually the donor, but it could be somebody else as well. Like it could be the donor's kids, or it could be some other entity that isn't a nonprofit that wants to have some of the money. So yeah, so it's like this whole class of different kinds of and they're all used to sort of avoid tax. The reason that they exist is that they help the donor avoid tax in really creative ways. And usually, I mean, I've seen a bunch of them, but not as nearly as many as I was expect to see. Like, because it's such an interesting thing, and it seems to be like good for everybody. I'm surprised that we don't see more of them, I guess.
Yeah, I'm surprised too. And I sometimes wonder if people, I think part of that is I don't always know if some of the estate planning professionals, I wonder how much they're bringing this up, and then what level of, because this type of stuff takes a higher level of sophistication in a nonprofit, right? To know how to handle all the back end piece of this, the accounting of it, making sure, do you have enough financial stability to like fulfill these ongoing obligations and to take
Right.
care, right? Like there's some potential risk. And I think because of that, maybe that's why we don't see it as much, or people don't even realize it's an option. I mean, I think it's a cool option. I think about that sort of as I look at my life and as I get older, if there's an appreciated asset I have, I think it'd be great to kind of know I'm helping charity, avoiding taxes, and getting a bit of an income stream. Like, I think that's kind of it's a win-win across all levels to me. So I guess, but I also wonder, back to that sort of financial stability piece, like, is the nonprofit stable enough? Have you seen this not work with a nonprofit, that like, where would be the downside, do you see, for a nonprofit taking on something like this?
I think you have to be honest with yourself. Is it something that you can handle? Is it something that once you leave, that the people that are at the nonprofit after you are capable of taking on? So you're normally going to see these kinds of things with things like hospitals, food banks, universities, like people, like organizations that have some heft to them, where this kind of gift isn't going to just like kick over the anthill and have the ants running everywhere.
Yeah.
Because like in the example that you gave, like, so a charitable gift annuity, which is what the question was, like you said, like so just in the simplest case, like, I have $1 million. I want to take a tax deduction on that $1 million because my tax planner says I need to take a big tax deduction. So but I don't want to give away all that money because I want it still. So I give the $1 million to the nonprofit, and then they have to give me $10,000 a month for the next 20 years or something like that. Right?
Yeah.
And so that says that the nonprofit needs to exist for 20 years and needs to have capable management for 20 years and has to know what to do with that money once you hand them $1 million, do they know what to do with it? Are they just going to freak out and like, I've never seen this much money before. Are they sophisticated enough to already have like an investment management plan and to know what to do with it and to be able to handle the accounting, because a whole bunch of accounting comes along with it too. Like, as soon as I would say, if you asked most sort of nonprofit bookkeepers that are doing like $1 million to $5 million a year organizations and says, okay, so we're going to do a charitable gift annuity. You ready? They're going to be like, hang on, let me Google that.
Yeah.
Right. They're going to have no idea how to do it.
Yeah.
And the accounting for it is complicated. It's the split interest agreement. FASB's got this whole long section in the accounting standards that says like, this is how you do a gift agreement, right? Part of it goes as an asset, but you also receive that, it's very complicated. Mm-hmm. It's actually not that complicated, but it would be complicated if you've never done it before. So I can see donors not like wanting to give it to your typical nonprofit just because they don't think they have the sophistication, because you have to trust them. Like, if I'm going to give you $1 million and you're going to give me $10,000 a month for the next 20 years or 10 years or 5 years or whatever it is, I have to believe that the nonprofit is capable of doing that. I think one of the other challenges with it is that the investment managers aren't making any money on the transaction after the money leaves the donor's hand and goes to the nonprofit, because then all of the money they were making on keeping it invested is going away. They don't get that anymore because it's whoever the nonprofit's investment manager is.
Yeah.
So it really has to be donor driven. Part of the reason we don't see many of them is probably because there's no money in it for the finance manager for the donor. So the donor has to suggest it. The donor has to hear about it somehow. And many times, in a university setting or in a big nonprofit setting, that's whoever is doing your fundraising people, whoever your development team are, or they're going out for these major gifts. They say like, here's something that we've done successfully with this high wealth individual who had this particular scenario, and this is how it supported the people in our community, right? Rather than having it come from the investment manager who's never going to suggest it, right? But there's lots of different flavors of it, which is kind of interesting. So the charitable gift annuity is sort of the simplest, where you get the money up front and then you pay the donor back. And then, the sort of unstated assumption, even though it's a contract and it's totally stated, is when the donor dies, you get to keep the difference. So if the donor lives a really long time and the contract isn't written in such a way that, it's got an end date. So let's say this lady lives to be 115.
Yes.
You're like, that was not in our plan. And now we've spent all the money you gave us and we're just paying you, right? That might be something you would want to look at, but usually they're written in such a way that won't happen. But then there are other ones that are like charitable remainder trust would be like you get the money at the end, kind of like the annuity, sort of like that, except for you don't actually pay. They keep it, and then you just get it's all so you get it at the end. And then charitable lead trust, where you get it up front, and then it slowly goes back out to somebody. So there's all these different kinds of scenarios. There is an organization called, and I had it queued up and then, of course, wrote over it, the National Association of Charitable Gift Planners. And they've got a ton of resources on all of these different flavors. They've done a bunch of research from the nonprofit side. It's really kind of more of the nonprofit side too. They talk about how do you value some of these? When somebody gives you a life insurance, I'm just going to give you my life insurance, right? And then when I die, you get how do you account for that, right? So they've got a whole thing on how do you account for somebody giving you life insurance, that stuff as well. And is this a good idea for my nonprofit? That information as well on there. So it's a good resource. I don't think they're really selling anything to us. They're selling it to the donors. So most of the information for us is freely available, which is very, very nice. And we will put a link to that website in the show notes.
I think there's a lot of really sophisticated planning tools back to this, like charitable giving planning tools. And so organizations that have some maturity and are ready to at least you don't have to necessarily be the expert at it. You need to your point, Andy, make sure you have sort of the back office structure to support it, even if that's kind of an outsourced person. Or I know of organizations that'll bring in a planned giving consultant from time to time, right? Because they don't want to house or pay for the salary of a planned giving full-time staffer. Some organizations use things like community foundations that may have that expertise that resides and sort of the money goes through the foundation to the nonprofit. So there's a lot of ways, I think, to structure this. And I always wish people would take more advantage of those and in those conversations, because how often do we hear nonprofits go about this just asking for basically a gift of cash and not realizing how many donors, is that really the way donors and people who have invested money and are looking for tax breaks and to avoid capital gains and those kinds of things? There's so many other tools in the tool chest to help that donor accomplish their goals and help get your organization the money that otherwise, if it's an outright ask, they're like, no, I don't have that money, that cash available, but maybe there's another way. So I think being versed enough, you can talk about it and bring it up so that you sound smart enough that you're not completely, shooting out of the dark, but that you also have those resources available if it does go, forward.
Yeah. And if you do have an investment account, so say you've got some money invested and you're maybe an endowment, hopefully not an endowment, but some kind of money still salted away. It's usually with a company that has investment professionals that are working for you. And that's a really good question for them because they want to be helpful. And this will they're on your side here because if the money goes to you, you're going to invest it most of the time. So they're working for you. And if they're with a bigger firm, a firm that has more than a dozen people, even small ones, there's going to be somebody that they can bring in that can talk to donors about it. So if you've talked to a donor and you've mentioned something like this and they say, well, I have this money now, but I do have this massive tax bill and I'd like to figure out how to take care of that. You can talk to your investment company, whoever you're working with, and say, I have a donor that I'd like to bring in whoever your smartest tax planning person is, so we can talk about some of these charitable split interest agreements with this donor. And I would love for you to be the point person because these big words make me confused, right? I'm a relationship person, yes, not a math person. So yes, if you can get the math person in who's also the relationship person who maybe has some skin in the game, that's a free resource for you in a lot of cases. They will bring in whoever that person is and they will go to lunch with you guys. And sometimes they pay, which is nice too.
Oh, that's cha-ching, right?
It's a free lunch. Worst case, it's woohoo. A free lunch.
Hey, everybody. So you're hearing the recorded version now of us officially thanking you and telling you how grateful we are for you listening. And we are all those things. And we also always get stuck at this part of the podcast going, oh gosh, we sound like we're saying the same things every time. So please, 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 if you're a listener, tell us how we can like mix it up and make this ending and make the openings a little easier for ourselves, because we're fried by the time we're done sort of, analyzing and responding to all the questions. And we really just need some motivation. So there's your challenge. Send us motivation. Give us new ideas, send us your questions. Pretty easy, right? Thanks for listening.